Yeah, no, good question. No, certainly deposits are in focus this quarter. And if you look, right, JP Morgan, the standout today, it guided up net interest income. Then you had kind of Wells Fargo and Citi. They kind of reiterated net interest income expectations for the year. And then PNC guided net interest income lower for the year. And what you're seeing on the deposit front is deposit balances or deposit growth is under pressure as money seeking higher yielding alternatives. Deposit betas or deposit rates of what banks are paying is going higher. And then within banks are seeing a mix shift away from non-interest bearing to interest bearing deposits. So all that, will put pressure on net interest margins looking out. For the biggest banks, it's not, the majority of what they do, but for PNC and as you get onto some of the banks reporting next week, it is the majority of what they do, and thus will be a larger headwind.
So tell me if I'm wrong here. I wasn't surprised that much by the big banks having some good results, but I was a little bit interested in how detailed PNC got about, let's give you real granularity on our commercial real estate exposure, lack thereof, the exact type of deposits that we've got from companies and individuals and how many of those are insured. Is that going to be the new standard for regional banks? And are they going to have to sort of pass all of those new bars with flying colors?
It is. I think, given kind of recent events, certainly deposits, there's a lot more focus on deposits than ever before. And PNC, we thought, did a good job detailing its exposures there. And we look forward to other banks doing that next week. We think their customer base is a bit more resilient. They actually grew deposits ever so slightly in the quarter. We're concerned that some of the regionals next week will see contraction. And then with respect to commercial real estate, a lot of emphasis there, particularly on the office sector. For the biggest banks, it's not necessarily as big of an exposure, but, we do expect losses to go up. But as you kind of go down the size of the banks and go to some of these regionals, it is a much bigger concentration risk and something I think investors have to be mindful of. And we, push companies to give more disclosure there, because if you look at the kind of the 10Ks, it's been lacking over the last several quarters.
We got a lot of reassuring commentary across the bank conference calls today about the state of the consumer. You could even argue that the provisions for loan losses were better than expected or modest, depending on which bank you looked at. Is this the calm before the storm, meaning that, yes, this bank turmoil that we saw play out in March did happen in the last quarter, but have we seen the full effects of it actually ripple out into the sector overall?
Yeah, so 2 points there. If you think about, banks work off of average balance sheets, and for 10 weeks of this 13-week quarter, everything was fine. And then 3 weeks was kind of the post-SVB world. So you will feel the full brunt of that in the second quarter. With respect to credit quality, you're right. I mean, loan losses have been historic lows for a while now. We fully expect them to normalize, but this normalization process kind of continues to get pushed out. And quite frankly, as this kind of recession continues to get pushed out, I mean, unemployment rate is still like 3.5%, so approximating like 50-year lows. I think most banks who have kind of provided loan loss guidance have losses going up as the year progresses, but at a measured pace. The banks are trying to get in front of some of that. They built reserves last year, continue to build loan loss reserves in the early part of this year. But loan losses will go up. Our expectation is it'll be manageable. And the banks enter this period of uncertainty in fairly strong positions.
Jason, very quickly, as we go into another busy week of bank earnings, what would you be buying right now? What's your top pick?
Yeah, no, I mean, listen, we liked, JP Morgan kind of going into this earnings season. We think, they did a good job today. As we think about, next week, we think the trust banks are standouts. State Street Bank in New York are early, in the week and maybe a bit more cautious on some of these regionals.